Barks Alpha here, reporting for Newshound from a snowy forest in the middle of nowhere with your 24-hour crypto news roundup. On today's bulletin, free speech champion Rumble launches Rumble Wallet to support creators. Treasury giant Bitmine bets $200 million on Mr Beast. Google Play to ban unlicensed exchange access in South Korea. Eric Adams fires back at rug pull claims. And, did the Venezuelan Polymarket insiders vanish behind bars? Let's dig. The free speech rival to YouTube, Rumble, has announced a strategic partnership with Tether to launch a non-custodial crypto wallet integrated into its ecosystem. The new Rumble wallet marks the first commercial use of Tether's Wallet Development Kit, WDK, allowing users to tip creators using Bitcoin, USDT, and gold-backed Tether Gold without the platform taking custody of the assets. By utilizing a self-custody model, Rumble and Tether cut out the middleman and bypass traditional financial intermediaries that often impose fees or censor creator payouts. To bridge the gap with mainstream users, the wallet includes fiat on- and off ramps via MoonPay, enabling supporters to convert traditional cash into digital tips seamlessly. Rumble CEO Chris Pavlovski frames this as a critical step toward financial independence for the global creator economy. Speaking of content creators, Bitmine Immersion Technologies, the world's largest Ethereum treasury firm, has announced a $200 million equity investment in Beast Industries, the holding company owned by YouTube megastar Mr Beast. The deal, spearheaded by Bitmine chairman Tom Lee, isn't just a celebrity endorsement. It's a strategic play to integrate DeFi services directly into Mr Beast's future financial platforms. By leveraging an engaged audience, Bitmine aims to move from crypto-native circles into the mainstream cultural and consumer arena. This partnership signals a new era where Ethereum will be presented to the next generation of financial consumers. And in news coming out of Asia, Google is preparing to enforce a major policy shift in South Korea, setting a January 28th deadline for crypto apps to prove they are registered as virtual asset service providers. Under pressure from the South Korean Financial Intelligence Unit, the Google Play Store will begin removing apps from prominent overseas platforms, including giants like Binance, OKX, and KuCoin, unless they secure local licenses. This enforcement turns the digital marketplace into a regulated zone, mirroring strict local laws that mandate 80% of user deposits be kept in cold storage. While custodial exchanges and software wallets face potential removal, Google has clarified that non-custodial wallets, where users maintain their own private keys, remain exempt from these licensing requirements. Back stateside, and former New York City Mayor Eric Adams has broken his silence following the catastrophic collapse of the NYC token. In a formal statement, Adams's spokesperson Todd Shapiro dismissed allegations of a rug pull as false, insisting that Adams did not move investor funds and did not profit from the launch. The controversy erupted after on-chain data showed a sudden removal of liquidity at the token's price peak, wiping out hundreds of millions in market cap and leaving retail investors in the red. Adams' team, however, attributes the crash to standard market volatility rather than foul play, framing the initiative as a free and voluntary effort to fund blockchain education and civic projects. Speaking of suspicious activity, the high-stakes Polymarket mystery is unfolding as several whale wallets, which netted massive profits by betting on the arrest of Venezuelan President Maduro, have abruptly gone dark. The disappearance of these traders coincides with a statement from President Donald Trump, who claimed that individuals responsible for leaking classified information about the U.S. operation in Venezuela are now in jail. While no direct link has been confirmed by analysts, the timing raised red flags. The primary suspect wallet deleted its account after securing nearly $195,000 in gains from bets placed just moments before events occurred. While two of the top three suspicious accounts have vanished, the remaining trader has moved their earnings into a massive $28 million market, betting that Iran's supreme leader will be deposed by January 31st. That's it for today, dogs. Remember to share with the pack, keep your noses to the ground, and your ears pricked so you never miss a beat. Reporting for Newshound. This is Barks Alpha. Yes, I do.